Hey guys, so with the recent uptick in volatility, in fact, major uptick in volatility across really the universe of risk assets, certainly from equities across the board, even into different asset classes like high yield and other parts of the market, we need to cover a really important concept that is imperative for you to understand in order to be able to maneuver these more volatile markets. And the concept has to do with essentially volatility, but it's something called the average true range, or also looking at it as the ATR. So I'm going to give you this real sort of layman's terms way of looking at it, which in other words, we're not going to make it too simple. We're going to make it just so you can actually use it. As opposed to making it too complicated, I guess I'm trying to say. But before we look at the charts, before we go into the charts, I want to just quickly make this point. When the volatility spectrum, or just the volatility level, goes up in the markets, you have to start adjusting your risk parameters, meaning you have to start using different stop loss levels, different profit targets. Almost doesn't matter how active you are, whether that's on an intraday basis or on a multi-day basis. For investment purposes, it doesn't matter as much, although the entry points there can get more dicey. That's number one. And the second thing has to do with trading size. So we're going to look at this now, and then we're going to talk about those two things: profit targets, stop losses, and trading size adjustments, which is really imperative to be able to work these markets properly. And I can tell you from my own experience, there was a time back in 2010, 11 actually, when I didn't do this properly. And then as soon as I started adjusting, I started making a lot of money just because of that one simple trick. So let me walk you guys over to the chart, and there's two charts we're gonna look at. The first chart is the S&P 500 at the top. And of course, you can see we had that big drop over the past number of days here as of this recording. And what's more important, though, from a risk management perspective, is to understand what happened here at the bottom of the chart. And at the bottom of the chart, what we have is something called the average true range. In fact, it's the average true range over the past 14 days. Basically what it is, just a different way of looking at volatility. Some people like to look at the VIX, some people like to look at other ways of measuring volatility. But from a risk management perspective, I think ATR is the most important concept to understand, particularly if you're a bit more active. So the way to look at it is this. Basically what the ATR tells us is what is the average intraday range, one-day range basically, over the past, in this case, 2 weeks. So think about it this way. So you can see that the average true range here on the S&P 500 SPY ETF, as little as just a couple weeks ago, was only between 2 to 3 points a day, meaning on average the S&P only moved about 2 to 3 points per day. Now the ATR is above 7, right? So that is basically I'm going to call it a 300% increase in the average intraday move. And you have to adjust your risk parameters because of that. Another way of looking at it is this way. I created this little chart here. This is, again, the S&P 500, and the each one of those blue sort of verticals represents basically I think 2 hours of trading. But you can see how the range here was very tight for a long period of time, and then we started having this range expansion. And so it's important to do two things. So let's just kind of go back and I guess we can flip to this chart and kind of talk about this. So if you are, let's say you're a day trader, okay, and then we can talk about any durations here. But let's assume you're used to that lower volatility spectrum. You're going to get shopped back and forth if you keep your stop loss at the same sort of percentage moves as you did in the low volatility environments. You have to adjust for that. Same thing with your profit targets. You have to give things a lot more breathing room. Same thing for the swing trading time frames. If you are looking to usually make between 3 to 5% on, let's say, the upside on a first target on, let's say you buy a stock. Nowadays, this 3 to 5% move doesn't happen in one day. It doesn't happen in say a few days or a few weeks. It can happen in half a day. Just the other day, the S&P 500 moved 3% on the upside in about 30 minutes, right? So all of this brings me to one really important point. And that point has to do with risk allocation, or basically trading size. So let's assume this, and this could be any number. If you have a much larger account, add a 0 or 2. If you have a smaller account, subtract a 0 or 2. Let's assume your average trading size, your average risk per trade is, let's say, $1,000, right? And you are, again, using risk parameters that are fairly standard in normal volatility periods. Well, when you have a much more volatile environment, not only do you need to adjust your stop losses and profit targets and give them more leeway just because things are more volatile, you also really have to reduce your trading size. It would basically mean to kind of almost going back to half of that. So maybe if your average trading size is $1,000 of risk, maybe take it down to 500. A lot of people, in fact, most people don't do that, which is why they end up blowing up in periods like these that you're seeing on the chart when the volatility expands at such a rapid rate. You need to adjust your trading size, and when you get back to the average trading size again, maybe you start. When you get back to a more normal average true range or daily volatility, you can get back to a normal size. So, just wanted to give you guys a bit of a heads up on this. I hope this is helpful. And if you like this kind of stuff, if you want to see more of this kind of stuff, please leave a comment down below. Give us a thumbs up, subscribe and all that kind of stuff. But I'm happy to entertain any questions, any topic, as long as it's within the realm of possibilities, the things that we do. Hope it makes sense. And I'll see you guys soon.